Hey, Top Gun Options primary traders, Matt Buckley, call sign Wiz, the primary model portfolio manager here at Top Gun Options. Want to knock out a primary trade alert today on Under Armour. Now, we have currently working in one of our model portfolios a trade on Nike. Similar, Nike's bigger into shoes, but they still do apparel. Under Armour's more in apparel, and Nike's actually coming out with earnings on Thursday, so it's going to be interesting to see how our Iron Condor plays out here. But let's take a look at Under Armour. Why am I taking a look at this? Couple reasons. Well, let's look at the report card first of all. They get a D on our Trade Monster platform. Yeah, B for financials and earnings track record. Beat. Yeah, okay, great. They have earnings coming up on the 23rd. Look at this. This is nuts. Now, folks who have traded with me for a while know when I say this is nuts that their ears should perk up. They get an F. Their PE is 51. Let's just round up and call it a 52, folks. Looking at the chart, Under Armour's had a respective run in the past year. They've risen about, if you do the math, it's about 38%, maybe 40%. Let's round up. Let's say they've had a 40% run in the past year. Not too shabby. Here's the problem, though. Under Armour is currently trading at 42 times this year's expected earnings. Now, for all of you non-Navy guy political science majors out there like me, who aren't as or who are smarter than I am, that's way inflated. And also, they have a problem with inventory. Inventory rose by 30%, according to Barron's, in the first quarter, while sales ticked up only 23%. Now, again, I'm no math major. It's not rocket surgery, folks. 30% inventory, rise in inventory, 20%, 23% sales. Something's wrong there. Doesn't work. Now back down. Where is it? In May. Where are we? May, they had some good earnings back there in April, and actually in May. UBS, kind of uber heavy bank on Wall Street, upgraded them to a buy back in May. Well, guess what? Last week they came out and reversed course and downgraded it to a neutral. Let me tighten up our radar scope a little bit. And why did they do that? Well, the heavies over at UBS, in a report to a client, according to Barron's, said that spring sales had been pulled forward into the first quarter amid warm winter weather. Anybody remember that? Everybody's like, where the hell was the winter this year? Not too much snow, wasn't that crazy? So a lot of their sales have been pulled forward into the first quarter. Here's the quote. We believe strong early spring trends have decelerated slightly, leaving less upside to second quarter street earnings per share estimates. Okay, these analysts kept about a $1.05 price target for Under Armour, which would alone value the company at 35 times 2013 earnings at $3.01 a share. But even that, a $1.05 looks way hypoxic at these altitudes, with anticipated profit growth closer to about 25 cents. An analyst at Stephens, by the name of Travis William, rates Under Armour equal weight with a price target of about 88 or 29 times expected earnings. And he was quoted as saying, hey, given the company's current valuation, it wouldn't take much to take the stock down. Now, for all of you who know my strategic mindset, I could not be more bearish on the market and everything that's going on in the world with Europe, China, things that are going on in Syria. So let's take a look at that. Even if I'm looking at August, even if 105 is their price target, which I think is too high, let's take a look at that out to August. The dog days of summer, Olympics already, let's and I'm going to go wider strikes on this. I'm looking at selling the 105-115 bear call spread. So selling that, and let's see what we can get for that. Let's go mid-market, right about there, 225. 10 of them. Let's analyze that. Let's see what our risk profile turns out to be. Now with a $10 wide strike, see, we're going to be risking a little bit more. But we have a 71% probability using at-the-money volatility of collecting our full credit of $2,250. Break even is up there at 107.25, and there's at least a round up 76% probability of that happening. But again, it is way hypoxic up at these altitudes unless they come out with blowout earnings, and unless all these smart people are wrong who think that with the warmer weather and over inventoried and sales report, even if they're wrong, I think this gives us enough buffer and it gives us enough time for this trade to work out. So here's what we're going to do. Looks like it's already moving away from us to go mid-market. Looks like about 222. I'm going to confirm that. So again, we are selling 10 of the AUG 105 calls. We think that's the ceiling. And then we're buying a $10 away strike. I usually do $5. I'm doing $10 in this case because I'm very bearish on this stock for a net credit of 223. I'm going to confirm that. I'm going to fly that one down range. Contingency plan. If we lose more than half the credit we took in, we'll take a look at bailing out unless other conditions dictate. Okay, so there's a August bear call spread on Under Armour. It's just way too hypoxic here at these altitudes with the earnings estimates. And in this type of atmosphere, folks, when it's a really bearish market and if somebody yells fire, things tend to go down a hell of a lot faster than they go up. So there's our bearish trade on Under Armour, adding that to the primary model portfolio, which, by the way, obviously is the primary model portfolios. Both of them are doing extremely well. Let's take a look at March 1st to today, the 3 months, almost 4 months that I've been managing the model portfolio. You know, we are up nearly, let's go to today, 26th. We are up nearly 79% return on risk. Look at that, almost $30,000. On $50,000 in a haircut, that's about a 60% return. On $37,000 in capital deployed, that is about a 79% return. So I'm liking life, loving what's going on in the market, loving what's going on in our model portfolio. There's your one-year trade alerts for this week, and I'll be out with another one here shortly in the week. Happy hunting. Make sure you hedge.